Hello, hello, everyone. Welcome to the closing playbook for Friday, September 26th. Happy Friday. Hope everyone had a decent day. Market was a little rocky, a little hard to follow maybe. Hopefully you did well. We're going to have special guests here today. As you may have seen from the Telegram message or two, Nathan and Graham could not make it today, so we are going to have special guest Silas Peters back to give us some timely trading information, go over some new stuff with us. Let's see what we have going on. Well, let me bring Silas is here. So let me bring Silas on. Hey Silas, you're muted, but how you doing, man? All right, give you a minute to get settled while I check the chat here.
Hey David, how are you?
I'm doing well. How you doing, man?
Good, good. I was on the phone. I hope I don't know if I was muted or you could hear me.
Oh no, didn't hear you till you said hello.
Good.
All good.
It was a good
Let's see.
conversation.
Regarding 60-minute, I'm just checking the chat here. Yeah, Wendy, sometimes listen, we have a lot of winners, we have some losers. Occasionally people join right at a time where the market doesn't go the way we want and they start out with a bad loss, but I'm glad you're still here and stick with us because we have a lot of people who are learning a lot and are making money overall, and that's the goal. Is not you can't win every trade, but the goal is to win in the long run. So I'm glad you're still here and stick with it. Just be smart about how much you're risking on each trade so that you're not going for the fences on a trade, and if you lose, it hurts you too bad. You need to be able to be in a bunch of trades for a small part of your trading account in each trade, and that way you can sustain the occasional loss and keep moving the bottom line upward. All right, Jim, let me see. Graham, regarding 60-minute payout trade. Okay, so with 60-minute, so let's talk about 60-minute for a minute, because Jim is asking about that. So on a 60-minute trade, if it's a bullish trade, so let me double check my info here on what we did in 60-minute just to make sure I'm talking in the right direction here. So yeah, so what we did on 60-minute was a bullish, it was an upward trend indication at the beginning of the day. It was a bullish spread. So Jim and anybody else. So yeah, when we do one of these vertical debit spreads and we're bullish on the calls, we're going upward. It needs to expire or you need to exit it. Either way you play it, uh, above both strikes. So we buy one call, we sell one call. If we're going upward, we're always selling the higher call. So you're always trying to get above that strike price of the one we sold initially to get in. So either way you look at it, you need to get above the higher strike or below the lower strike. So above both or below both strikes when we do those vertical debit spreads. And uh, what you'll make is the difference between the two strike prices. So it depends on what you're trading and what the difference between the strikes are. But for example, on XSP, if you took that one, it was a 664 call and a 665 call. So there's $1 difference between the two strikes. That's what you'll get paid if you exit it or let it expire. Above both strikes, you'll get paid out the dollar difference between them. But of course, you paid to get in the trade, so your profit on it will be the difference between the dollar that you get and whatever you paid to get in the trade. So if you paid 50 cents to get in the trade and you close out above both strikes, you paid 50 cents to get in, you get $1 back. You made 50 cents on each share or each spread, and that's 50 cents on your 50 cents. So we'd call it 100% return. Now, if it closes below both, then you'll just lose what you paid to get in the trade, which would be the original 50 cents. And if it looks like it might close between the two strikes, then you want to get out of it by putting an exit order in to make sure that you don't expire between the two strikes. Although on XSP and SPX, you don't really have to worry about that. You only really have to worry about that on the debit spreads or the vertical debit spreads that we do on other tickers. SPX and XSP are special. They're among a handful of special tickers that you don't have to worry about getting assigned or anything like that. You can just kind of let them expire and never have to worry about them. So in the case of 60 Minute, if you're doing the XSP and the SP or the SPX, which is what he trades in 60 Minute, then you never really have to worry about it. You can just let it expire. So you can either put an exit order in to get out when it hits your target, or you can let it expire. If you put an exit in to get your target, then it's considered a day trade because you're doing it the same day that you got in it. If you just let it expire at the end of the day, then it's not considered a day trade, even though theoretically it's the same calendar day. It's after market close. It's when it expires. So there's no day trading there. So I hope that answers your question. You get a full payout if it closes above both strikes, or in the case of if we're doing puts and we're going downward, it would be below both strikes. You get paid out for in full. All right, let's see what else we got here. Yep, weekend option trade is out. It's in the members area for those who are part of weekend options. That one is out, and I haven't seen. Oh no, well, we wouldn't have a day. We wouldn't have an overnight because it's Friday, so it's weekend instead. Yeah. So the weekend option trade is out from Nathan. Let's see what else we got going on here. So when Silas comes back, it looked like he was having a little bit of technical difficulty with his camera or something like that. So we will. There he is. You back?
Yeah, I'm here. Sorry.
That's okay. All good. So we had a question here whether your insider dashboard alerts, whether you have any plans to take them outside of Telegram, or whether long term it looks like it's going to stick just in Telegram. Someone's just interested in getting them a different way.
I'm not opposed to it. You know, if as long as the technology is there to support it, which we all know that we can send SMS text alerts. So I think that's probably something we'll have to discuss with the team, and
yeah,
we can roll it out.
I mean, I guess it depends how many people request it and stuff like that. I know that Telegram has been the most reliable way that we can get alerts out quickly. SMS sometimes is delayed when we do a bulk one. Just like sometimes you'll get, hey, we're starting now, and it's already 3 minutes after the hour, and we sent it out 10 minutes before. We get that kind of nonsense in the SMS world. But
yeah, I think it's a great idea, and again, not opposed to it. But that is one of the primary reasons that we stopped on other services doing it, because we can't control carriers, and so sometimes carriers will kind of go rogue and decide what they want to let through and what they don't want to let through, and then you have people get upset because they didn't get the alert or it wasn't timely, and so it ended up being kind of more of a hassle, not from a client perspective, just technology and dealing with carriers, and there's what is there, a dozen different carriers, so. Unfortunately, it's something out of our control. They weren't going through, or they weren't timely, and so if we find something where we can improve upon that, certainly look at it. But to answer that, or to follow up on that, you can have Telegram on your phone, and you can set alerts that way. So it's like getting a text message, and you're avoiding the carrier issues. Right?
There you go. Yeah. Well, people are so used to getting text messages for things, they don't realize from the provider side how much of a pain in the butt it is.
Yeah. Somebody says Telegram works great. Quit day job. You got it right there. You don't have to be like right there. This is not white knuckled, high stress, veins popping out of your head type trading. It's like, you'll have time,
Yeah.
Rare occasions might pop it.
Yeah, yeah, absolutely. There's one thing I want to do here before it gets too close to market closing time. So on Thursdays we do something called Shotgun Thursdays, where Nate does this kind of spattering of trades that just kind of on the basic assumption that generally speaking Friday is strong for most stocks overall, and that if you kind of hit at least one thing in each kind of sector or general area of the market, and you do enough trades, a half dozen trades or so, that you'll just net out a winner just based on odds of most things going up on Fridays. So we've been doing that every Thursday. With Nathan out, I just wanted to show you guys just a look at like where we wound up if you took all the shotgun trades. A lot of people don't take them at all because they're fairly speculative and stuff like that. But for those that are in it and maybe in some or in all of them, this is what it looks like it's going to be. The reason I want to make sure we get to it at a timely manner is because Hood looks like it might close out between the two strikes. So anybody who's in Hood from the shotgun trades yesterday should put an exit order in to get out. I'm not sure that that's based on the last like couple of minutes worth of pricing because I don't have it in front of me, but I wanted to make sure that at least a few minutes ago it looked like it might be closing between the strikes. And like I just talked about in regard to 60-minute, if you're trading SPX or XSP, one of those cash based options, then you don't have to worry about closing it out. But on most option spreads, which are based on stocks, like all of these, you'll want to make sure you don't wind up between the two strikes. So, you can let it just expire if it's a solid winner or a solid loser, but right in between the two, you want to make sure you get out manually. So, if you're in Hood from shotgun trades yesterday, go ahead and place an exit order to get out at whatever it's at right now, and just cover your bases on that one. But it looks like we had 5 winners and 1.5 losers, so to speak. One 100% loser, one partial loser on Hood, and so overall 5 for 7 or 5.5 for 7. Not too bad on just kind of some random trades covering kind of the wide swath of the market there. And it seems to be working out. We do it every Thursday, and I think everyone has been, except maybe one. Maybe there was 1 week where we didn't net out ahead, but it wasn't. I mean, it was never a complete loss. It was never 0 for anything. But yeah, we did pretty well this time around too. So something you can consider participating in on Thursdays if you want. But it's definitely a fast moving thing. Definitely not a tried and true system at this point. Just Nathan and Graham kind of picking things that they look like have good ROI potential, good leverage on the options, good pricing, and getting in the last half hour of the day on Thursdays to just take advantage of the overall bullishness of Fridays in the market. So there's that. I know you have some stuff for us also, Silas. If you want to get into that, you can start sharing your screen. I'm just going to scroll through the chat real quick, see if there's anything else we need to address real quick.
Okay.
Hey
guys. All right, you guys can hear me okay?
Yeah, absolutely.
Okay. Somebody mentioned that my hat was disappearing. So I got kind of called in impromptu. I had a hat, didn't have time to comb my hair. So hopefully you can get.
Yeah, it's because it matches.
Don't worry about that issue.
You don't have to worry about it. You're not going to completely disappear like Back to the Future. It's just because the hat matches the color of the cabinets behind you, and I can't tell the difference. But
I'm trying to show it. There we go.
Okay.
All right, cool. So thank you so much, Jason. I really appreciate that, by the way. All right, so let's get to the good stuff. You want me to go ahead and share my screen?
Yeah.
All right. I realized yesterday or the day before I was about 20, 30 minutes into my little workshop here, and somebody's like, "Yeah, we can't see anything you're talking about." I'm like, oh, okay.
Oh no.
Forgot to share the screen. So hey, it happens to the best of us. All right. So boom. Could you guys see now?
It's coming up. There you go.
All right, so we're ready. We're ready to rock and roll.
Yeah, man.
All right. Let's see. Happy Friday to everybody, guys. Just by the way, they better not be playing golf. I actually did get out and step away and play golf yesterday. It was nice. All right. So let's go ahead and get started. Thanks, Mr. Mound and the team. Thanks to everybody for tuning in here on a Friday afternoon. Hope everybody's got some nice plans this weekend. This is some very, very exciting stuff, though, that I'm about to share with you. My name is Silas Peters, in case you didn't know who the heck was talking to you. And we're going to talk about this really, I'm going to cuss, a badass tool. And I mean, I'm really passionate about it. David knows how passionate I am about this. And we're going to break it down exactly what it is, how we use it, most importantly, try and create opportunities out of it. So first things first, we develop tools and strategies to the best of our ability. Nobody can guarantee the future. There's always a risk of loss associated with trading. Past performance is not indicative of future results. I think we're all hopefully big boys and girls here. There are going to be winners, there are going to be losers, and maybe some things in between. But this is a tool for traders, not a trading service. Profits and performance will vary amongst users. You always have to trade with your own risk. And so Prosperity Pub has risk disclaimers. I encourage you to go check those out so you can familiarize yourself with the risk involved with trading. So in trading, there's a couple things that I can guarantee and that I can't guarantee. The one thing that I can guarantee is that there will be losers. I cannot guarantee that we will, what the market will do. There's no black box miracle system that prints out winning trades automatically. The whole purpose of our research and our work with traders like yourself is to help give you an edge in the market. And honestly, if you can't handle losing a trade, then this is probably not a place you should be, or at least not trading with real money. Okay, so losses in trading have occurred and they will occur again in the future. So again, my name is Silas Peters, a younger version of Mr. Peters. And today I want to share with you a very powerful insider trading tool that I think, and I really believe this, I think it could change the way you look at stocks and trading ideas for the long run.